8 minutes.
Start audition as well.
Got it, Cesar? Okay. Hope this has ink in it.
It's okay, it's fine. No, no. No, no.
He was just here. Yeah, he's done. I talked to him.
I think we're good to go though. I feel pretty good.
Steve, we'll talk about that.
Yep.
Just been open.
Talk about stuff. You guys
Looking great. This guy. Colts Neck, New Jersey. That's Southwest New Jersey. Colts Neck. COLT. I've never heard of it. 10 years in prison.
All right, I got it. It's 11 seconds.
No, he just pleaded guilty. And so he knows that he's going to get 10 cents. So his sentencing is scheduled for, I think, the end of next month. Or this month?
All right, we got about 2 minutes 57.
Where do you land on structured notes? I said, where do you land on structured notes? What do you think? So it's interesting because No.
So, what's up, guys? Welcome into
Yeah,
Income
sure. No,
Revolution.
I'll hang on there. Oh, God, yeah. Yes. Yeah. Yeah.
The home shopping network for ideas.
Sure, for ideas, yeah. Well, a friend of ours is, she just this morning, I watched her sign $1 million signature for the U.S. National franchise for Curves. The Curves, the women's gym, they were big. There's still 100 clubs around the U.S. Yeah, well, anyway, so our friend Kim just bought the franchise. Well, I don't know, she's hoping to make $1 million. They did the same thing in China and Taiwan, and then they sold it. They sold it to Jenny Craig. Oh, yeah, right.
Well, I don't know what happened to him, but he came in at that like
Yeah, what the hell?
I don't like this running late last minute. I mean, we're down the countdown. What we got? 30 seconds?
Seconds. We're at 2:59.
And what are people seeing right now if they log in?
A whole screen. We will begin shortly.
But they don't hear us. So you point to me right at the Cinderella hour, and I'm going to start the timer.
Good.
You start the theme music and all the other shit.
It's already going. That's what's playing right now.
Okay.
Yeah.
But whatever you got to do.
Get ready for it. It's going to happen any minute. I'm going to say welcome in. All right, Cesar. 3, 2, 1. And welcome into the Income Revolution Show. Consumer advocate Thomas Lipscomb here with you, alongside financial news guy Steve Siddall over there, as well as best-selling author Coach Pete D'Arruda, better known as America's Wealth Coach. How are you guys doing?
Well, what a great day in the market.
Wow, man.
Not really.
No, not really at
Crazy
all.
day in the market. I'm looking right now. Dow is down 442 points. Been down even more today. Made a little comeback and falling back down into that abyss. NASDAQ down almost 1%, and S&P down 0.62, over 0.5%, which is a big move.
That's
These
a big move.
downward moves, and it all came out because I've been talking about these inflation numbers, and they came out and they're higher than we thought, and we're not producing enough, and it's a combination of bad things happening here, and I think. I go shopping like every now and then, and I think inflation is a lot higher than what we're being told. And you can be told one thing, but then you go shopping and say, well, God, I'm being told one thing.
I'm confused.
And back in the day when you had to bring cash, like let's say there was no credit card, and you based on the inflation numbers that the government keeps telling you, you would have to start putting items. You remember seeing somebody? It happened to me back in the day too, by the way. To be honest. You start to ring stuff up at the cash register. You have to have the cashier lady start reverse ringing.
Reverse ringing.
Then you have to do that little roulette wheel. What should I keep? What am I going to get in trouble with at home if I don't bring home?
Yeah.
Well, how much junk food does Coach Pete have to put back?
Yes.
Fritos and candy bars and all that. So
okay, so here's one I have for you, Coach. What is something that you could not bring home from the grocery store? For example, for me and my kids, it's going to be ketchup. You got to have ketchup in the house if you're going to have a meal.
Yeah, well, that ketchup, mustard, the staple kind of things.
Staple
right?
things,
Salt, if you need salt. I mean,
salt.
Who wants eggs without salt? That kind of thing. Well, if you need eggs, You need eggs.
You do.
Eggs are in a lot of things.
Yeah.
And I started realizing that like last year when it was hard to get eggs. Not only was it hard to get them, they were like 5 times what they remember that.
Super
I hope we don't
expensive,
have
yeah.
that day again. Sort of like the toilet paper day. Remember when there's no toilet paper?
I
I
remember
remember.
that very well.
So again, toilet paper. One of the things. Greg Barron joining us late.
What's up, Mr.
What
Greg?
time do you start your 3 o'clock meetings, Greg?
I'm out there saving the world.
Whatever. All right. So
I don't think I'm on here.
What do you think? What do you think that your most important item is, Thomas?
So, ketchup is kind of the fun one, to say. But with kids right now, if I had to pick something, it would be the basics, the things I have to use to make them lunch, the things for breakfast, essentials, the core.
Yeah. Well, is it essential on your phone? Is Facebook or Meta? Is that essential?
Nope.
Well, it's down
No.
today. It's down 11%. That's
Is it
a big,
really?
big move downward. Nvidia's been bouncing all around since we talked about it at $900 a share. So it hasn't equaled that. It's been down.
Yeah.
So sell, like Kramer would say. What's Kramer?
Bye.
No, there he is. And then he
Bye,
says,
bye.
sell. So when does it become? You see some of these high flyers that take a dip. When is it a good time to take the plunge on the dip?
Well, you're right.
Well, you see a plane that's going into that corkscrew downward. Do you think the pilot can recover, or is the plane going to go right into the ground? And that's the decision people have to make. Now, we're talking about big money still with a Meta. Meta's at like $400 a share still, even though it's down 11%. We pull it's $439 a share for Meta. It's still not a cheap investment, is it?
No,
it's not
But
at
I saw they have that Meta 3, the third generation of the Oculus.
I
looks
saw that.
pretty
too.
cool.
Looks amazing.
What if they buy TikTok? What happens then?
Well, TikTok's in their own trouble. They got. I don't think they're gonna. I don't know what's gonna happen there, and I'm not
Yeah.
getting involved in that. I know that I will not put TikTok on my phone.
Yeah.
If
Yeah,
you want
I
to play
haven't
around
either.
with TikTok, get a dummy phone, burner phone like they do on the movies, because I don't trust it. I don't trust it. There's evidently some cool
No.
stuff there, but who cares how cool it is if the people in the back stealing your information
Yeah.
or doing something else? Who knows? I
Makes
don't
a
know.
lot of sense. It does.
And maybe it's fine. I just don't want to take that risk with my phone that has a lot of information on my phone.
Yeah, I
Stock
agree.
information, crypto. I've got some crypto codes on there. I don't need to download a app that give it and all that fine print. You ever see the fine print?
Oh,
no,
my
you don't
gosh.
see it. You scroll through it.
I ignore it.
But it could be saying we have permission to take anything that's on your phone and use it. Who knows? I mean, have you ever read the fine print?
No.
Never have. No,
I mean,
no.
with Eddie, I was talking to that with my banker today. I was in there open up a new account where I can get higher interest from 0.00% to 4%. It's a money market account. I might as well get some money with my money.
Sure.
And they had all this paper. I said, do people actually read all this stuff you print out? He said, not really, Coach. I said, yeah.
There you go.
I love
But we
that-
have to give it to you.
You do. There was a story online a while back where a mom wouldn't let her kid install, I think it was games on his PC or something, without reading all of the T's and C's
Yep.
before he did as a deterrent to try to play so many games.
No, I mean, you got to. I mean, but we can't, though. I mean, you could spend your whole
you
day
can't.
reading fine print. So
Yeah.
the glossy brochures giveth, and the fine print taketh away. We've said
Ooh,
that
I
for
like
years. In the
that,
financial
Coach.
world, it happens all the time in any part of the world. Car lots. You ever been to car lot before?
Oh yeah. Oh
Think
yeah.
there's some fine print there?
A little bit.
I wrote about that in my second book I ever wrote called The Fine Print Fiasco, What They Don't Want You to Know When You Buy, Borrow, and Invest.
Yeah.
Where do people usually get screwed? When they buy, when they borrow, when they invest.
Exactly.
So if you know a little bit now, there's no guarantee you won't still have bad things happen, but at least being informed puts you ahead of a lot of other people. Sort of like, again, the pack of zebras. There's one zebra. He's a little bit out of shape, but he knows that he's in better shape than the fattest zebra. So when the lions show up, he knows he'll be okay because the fattest zebra will be the one way in the back, and all the lions will concentrate on him, and everybody else gets away.
Hey, there you go.
So you don't want to be the easy target. In other
No, you
words,
don't.
you want
No,
to
you
make
don't.
yourself harder to be messed with, so to
Sure.
speak.
Yeah.
Thomas, what else you got over here?
There's a lot going on today. Steve, I know you have a few things that you want to bring to the table.
Right. So we're talking about the economy, the market today. I saw a piece by David Costin. He is Goldman Sachs chief U.S. equity strategist. He was on Squawk Box, and he kind of sums up things this way. I'll be curious to get your reaction.
Yeah, check this out.
What are we seeing now for the first quarter results? We're about 16% of the way through earnings season. We've seen thus far most of the companies, about 65% of the companies, have actually beat consensus expectations on the bottom line, and about a third have beat expectations on the top line. What that suggests to us is that companies are able and have been demonstrating the ability to kind of squeak over a little bit margin, and margin is basically hold there until a little bit higher. There was some desire to try to raise prices, but it didn't get that strong indication there's a lot of inflation coming. So our forecast is that market rises slowly in line with expectations for earnings.
Yeah, what this tells me is what you shouldn't do as a company is set high expectations. Set low expectations, you can exceed them. You set high expectations, you underperform, and everyone's mad at you. So it's all about what you have people expecting.
Yeah,
right? That's what it really comes down to.
It
is.
And so that's what he said, only about a third or and a half. So it's still, there's a lot that aren't meeting the expectations.
Well, so, I mean, how does this impact the retiree?
Well, a lot. I mean, it depends on, number one, where your money is as a retiree. I mean, are you in pre-retirement mode, that financial red zone, or are you already retired? Again, financial red zone. Financial red zone is, I look at it 5 years outside of retirement and all of retirement because you have to pay extra special attention to all your money when you retire because you don't want to do one thing, go back to work.
Yeah.
You don't want to have to go back to work. I mean, if you want to. Now, some people tell me after they retire, some of my clients, matter of fact, Coach, we're fine with money, but we're bored. And I said, well, vacations? We got plenty of money in vacations account. No, we just want to stay around here. I think I'm going to go get a part-time job or volunteer. I give blood a lot to the Red Cross. There's all volunteers in there, and a lot of them retirees.
Oh, sure.
It's pretty funny because you get bored. You really do. If you're not doing something, if you don't have anything to look forward to,
exactly,
you get left behind a lot of times. So keep your mind moving. Some of my most sharpest clients are some of my oldest clients, and those are the ones that we have a very small brokerage account set up for them where they make their own trades. They don't ask me. They research. They do like they're looking at today. They're probably looking at Meta. Is Meta a good time to buy? They'll probably call me and say, Coach doesn't give advice like that. Yeah, Coach, is a good time to buy? Well, maybe not. Who knows? With the stock market, it's up, down, all around. The only thing I can tell you is you need to take some money and put it in a place you can't lose.
That's right.
Not all your money, some money in a place you can't lose. That will give you a lifetime income check, otherwise known as a pension, to go along with Social Security. And once you do that, it takes all the worry, or most of the worry, all the money worries, not all the worries of retirement, but it takes a lot of the money worries out of retirement when you know no matter what happens to the money you have today, a new check's coming tomorrow. Or in other words, next week or next month or next year, however you set it up. Many people set it up on a monthly basis. A lot of people who are in retirement now, they're used to it. They take a check every month or every year and divide it in 12 months, and they can do it themselves. So a lot of people, though, like my dad, he told me one time, you get the money, it's easy to spend. He said, Peter, don't take all the money because you'll spend all the money. So
that's good, yeah.
Divert it into 12 different, if you want to get 12 different bank accounts, call one May, one September, one August, that kind of thing. Oh, I'm going to my September account now. Wait, it's only August. But if you're going into your September account and it's December, you're doing a really good job.
There you go.
Right.
But if you want to dip into the May account and we're only right here in April, maybe you need to either increase the amount of money you want for income or stop the spending or get away from Amazon.
Get away from Amazon.
You have to look at it, though. You
Please
can't
tell my
ignore it.
wife that.
Well, it's amazing how Amazon is a big part of the economy when they're supporting a lot of the delivery services, box makers, truck services. Even they have their own delivery service now, Amazon delivery service. Those are private individuals that actually bid on that, and they're entrepreneurs. They have that company with all the trucks. You see those Amazon trucks with the little blue with the swoop on it or whatever it is? Black truck with a blue swoop. Am I right, Greg?
The other day, Coach, I had to go to the store to buy something. And I couldn't find it. So I sat down, opened up Amazon, and I ordered it in the store from Amazon.
Were you looking for a watch?
It was a.
You didn't get the watch, I guess. I don't see it on your
Poke.
Greg was late to the show, folks. You can't be late to live TV, Greg. Come on.
Ideally.
Yeah. Greg said he's in entertainment. Yeah. You entertained me for a while when you weren't here. I entertained these guys at your expense, too, by the way.
There you go.
So, Thomas.
Yes.
It is a funny world. We're looking at the market. I mean, IBM is down big, too, about 9%. So it's not just Meta. It's a big, wide whoop of people, and sometimes the Dow's up and the Nasdaq's down, and vice versa, the S&P, but they're all down today, and it's because of the inflation numbers, and they revise some numbers every now and then too, and we see the price of gas, the fuel price is going up like crazy. I heard $7 a gallon now in some places out there west in California. So we're looking at. I was in Vegas. I was in Vegas a couple weeks ago, and we were hitting almost $5 a gallon for regular. Not diesel. $5 for regular.
That is incredible.
Crazy numbers here.
I'm spending $500 a month on gas.
When does it get bad enough, though? When are people? Because I don't drive that much anymore. I'm glad about that. Greg, I know you drive more than I do.
I drive.
Yeah, you go down to South Carolina a lot. Now, South Carolina gas prices more affordable?
About 20 cents a gallon less.
Less. Okay.
Yeah.
It used to be a lot better than that.
Yeah, I used to get a real good deal in South Carolina. Not so much.
Did we talk last week? I don't remember what we talked about last week on the show, but did we talk about how much California brings in for their gas tax every year?
Oh, you did mention that up. It was a lot of money as well.
Big number with a B at the end.
Holy,
$9 billion, roughly
$9
$9 billion, and every single penny has to be put forth to green projects in their state constitution. So
I wonder how
they
that's
bring
working.
the gas tax in.
How's that work?
And the money comes in, the money goes out. So hopefully they're putting it to good companies. And a feature on our show, every single week we're going to talk about some entrepreneurs that we see doing big things with things we never heard of, or things maybe we have heard of, but they're refining it or making it better. And we're going to have something called the Idea of the Week. And so later on the show, I'm going to tell you about an Idea of the Week that I found this week when I was in Palm Beach, Florida at Mar-a-Lago. We'll talk about the Idea of the Week that I saw. Very fascinating idea. That goes along. It's sort of like Uber. If you ever use the rideshare, has nothing to do with rideshare, but it's sort of like rideshare. But it involves you being able to transact in a restaurant without you having to wait for the waiter to come back with the bill. You know that little game you play.
Sure.
Now I always when I order, almost by the time they bring the food, I want to give them my credit card so I can get the bill handled, because if you wait for them, they're on what my daughter and I and my wife call island time.
Yes.
Island time is when they take their time. You ever been to the islands before?
Yeah, of course.
It's a whole different mentality, Greg, isn't it? They take their time.
Yeah.
And when you're ready to come in and eat and get out, you don't want anyone on island time in restaurants, and this is a solution to that. Every good invention is a solution to something. Remember the sticky notes when they came out? This guy working at 3M, he spilled some stuff on a paper, and he realized that it stuck, and it didn't leave any marks. He invented the sticky notes. Unfortunately, he was working for 3M at the time, so they kept all that money. But they're great invention. Who doesn't use a sticky note these days?
right.
Always,
Another great invention. Who didn't use silly putty back in the day?
Oh, of course.
My kids
I
still
think
do.
they still make silly putty. It was fun to take those comics and stretch them out and all that.
I loved it.
So we got a really fun show. This was again, while we're on here, we're going to be watching the market. It's staying about the same now. The Dow's down about 382 points. Again, shouldn't mean that much to you if you're long-term investing anyway. But if you're thinking about maybe you're thinking about selling yesterday, maybe you might want to wait and let it come back a little bit, or it could keep going down. So if we're looking at all your money in the market, then really you need to be paying attention. But if you just have a little money in the market, it's fun to watch, and maybe it is a good time to scoop up some. I told you last week I scooped up Meta at 199 years ago when it went down, and it went back up. So that's what happens in the market. It goes in cycles, and we're going in cycles too. We'll be right back after this.
So I got a couple more pieces of audio from Larry Fink, BlackRock. Okay.
Right, you ready? 5, 4, 3, 2. And welcome back into Income Revolution. Consumer advocate Thomas Lipscomb here with you once again, alongside our financial news guy, Steve Siddall. Also in studio with us, best-selling author, Coach Pete D'Arruda. Also in studio is insurance advisor Greg Berrien, joining the charge. Let's do this thing. Steve.
Yes.
You like to go out and find some rather naughty advisors.
Naughty.
Yes, indeed. Well, and I always follow up on them, and that's what we've got this time. This is a piece that came out actually last August. Was when it was aired, and it was a guy named what is a weird name, Craffy. His last name was Craffy.
Okay.
Anyway, so what he did, he was employed by the Army, not a representative of the Army, but he was employed by the Army. And he ended up scamming, like Silver Star, Gold Star families, taking their money, taking money from their kids, and
not good.
No, not good at all.
Big scam artist.
Big scam artist.
Stolen valor, almost. I mean, even worse than stolen valor. He's stealing money.
Yeah.
And so he's looking at about 10 years. So what am I talking about? Yeah, he
That's the same thing.
That's me. That's it. No, I just want to make sure it's in the right spot. But as a financial counselor, he didn't work for the he worked with people, but he was an employee.
Yeah.
And he took money from widows and a 13-year-old girl whose father had died.
Oh no!
So
wow.
So Kaz Craffy is 41 years old, and he won't see the light of day again until he's 51 or older.
So, hopefully older.
Hopefully.
So what do you say? 10 years?
10
years. So how did he get these people? Was he friends with them? Was he an advisor in the community? What was he doing?
He worked with the Army,
Okay.
and then the Army referred them to him.
Wow, he had a referral source.
Sure,
Oh,
and it
wow.
was the Army. And so they believed, most of the victims believed that he was part of
He
the
was
Army.
authorized. I'm sure he
Yeah.
didn't tell him he wasn't.
And he
That's what
wasn't. He
happens
never
sometimes.
was. And so that's what he's done. And
Interesting.
he ended up pleading guilty to 10 counts, felony counts, and they're talking 10 years. We'll find out at the end of the month. But I just wanted to follow up. That's a good one.
He deserves a lot more than 10 years.
Oh,
you
yeah.
ask me.
Yeah,
Unfortunately,
he does.
most of his financial crimes, especially they call them white collar crimes.
Yeah.
He's in Club Fed too.
Yeah, not
Coach,
many punitive phases there. They
No.
basically get off pretty much scot free. Even what's his name, Bernie Madoff.
Yeah.
He was
sure.
in Butner before he passed away. Butner right up here, and that wasn't a maximum security prison. Butner.
No, not
It was
by
where the
any
Blind Sheik was, and maybe still is. I don't know if he's still alive, but anyway, that's where they put celebrity people.
Okay.
Jim Baker, I remember him. Remember Jim Baker too?
I do remember him,
He was
yeah.
there too.
He
so
was
it
in
like,
Butner?
yeah, he was in
Wow.
Butner, and
That's fine, I didn't know that.
so was your boy Bernie.
Yeah.
You see Harvey Feinstein's getting out of jail?
Well, they overturned a appeals court overturned his verdict there. So that,
Yeah, we'll see what happens.
Now,
with
He
that.
won't get out of jail. He's in jail for a lifetime after
yeah,
that.
yeah.
Well, I wanted to actually, this kind of leads into another conversation. I was watching a documentary on, you guys remember the Evergreen that got stuck in I believe it was the Suez Canal in Egypt for a long time, blocked up the canal and all that stuff.
Yes.
So,
It was a boat, not a tree.
no, it was a big old container ship.
Yeah, yeah.
Sorry.
Well, Evergreen, the big old
Evergreen.
tree floated down the road.
Christmas.
Evergreen container ship.
Yeah, so I was watching this documentary, and part of the documentary overlaid what the Evergreen did versus a typical container ship. And it showed that Evergreen's captain chose to run the ship about 2 knots faster, which had no impact at first, but as it went around enough bends, it created this suction power or something because of the additional speed that ended up causing the problem. And the reason I bring up that story is thinking about your story right now. How do you identify an advisor that works well for you, and how do you make sure they keep them in track and in line? Yeah.
Well, I mean, you have to trust your instincts a lot of times. You can research. You have to be careful when you're researching. There's a lot of false information, good and bad, about advisors out there. Like if your competition doesn't like you, they may start a campaign saying bad things about you that's not true. And how do you really, it's hard to respond to that because it's the internet.
right.
It's out there.
Yeah.
So like when
Exactly.
somebody says something on a news program, even if they come back and they apologize a couple of weeks later, whatever they said, the wrong thing is out there.
Okay,
And it never
yeah,
goes away.
it's true.
It's out there, never goes away. And then it starts, after a while, it starts to be the truth because so many people see it, even though it's not the truth. So it's very important to know your sources, I guess. And
That's good.
And like Ronald Reagan said, trust but verify. And so we're looking at the crypto market. It's smart, trust but verify. Bitcoin around 60. I saw it a minute ago. Maybe 64,000 right now
Okay.
or so. Anybody who's in crypto knows that it's not a short-term play. And here's one thing: if you're playing the crypto market, play it with money that you can't. I mean, you're not going to miss.
You're not going to miss. Yeah.
And so you not the money you can't afford to lose, and play it with money that you're not going to need in the next couple of years, and don't margin it. In other words, don't play these option strategies and all that out there because there's a lot of manipulation in that market. And so if you have some options that you say, I'll make a lot of money if crypto goes to 68,000 by a certain date. And they know this. They know how many contracts are out there. So the big guys, the people behind the curtain, they see a lot of people that are going to make a whole lot of money if crypto goes above 68,000. And if not, they lose all that money. You think they might keep it below 68,000 until the date expires? We see that the options expire. The expiring dates are the witching hour, they call it.
Of course.
So same thing in stocks. See that too. You buy options. You can make a whole lot of money. You can always also lose all that money real quick. Yes. You tried options one time back in the year 1999, and like I said, I tried it one time. Never do that
It's
again.
dangerous, huh?
It's going in the Shark Tank right there, big time. 'Cause you're playing with you're going against computers. You're going against teams of people. There you are, the one little individual investor thinking you're going to equal the playing field, or level the playing field, and they basically make you think everything's fine. All of a sudden, they pull the carpet out on you. So just be very careful. So many places for your money to go in the money world, and it shouldn't be all in one place. We should divide it. If you have money that you can afford to lose, maybe invest in some startup companies. Again, that's why we're going to start doing our idea of the week and feature entrepreneurs of the week. So if you know any good entrepreneurs or have some good business ideas or ideas of just something like we talked about, the new sticky pad or the new something, right?
Sure.
A new light bulb. Let us know. We'll feature it on the show. We want to get the word out because it's important. If you don't get the word out, no one knows. And then what happens is your idea might be a great idea, but you don't have enough money to fund it. So it either dies on the vine or you give it to somebody for chump change, and then they take it and make it a big thing, and they just laugh at you. So we don't want to see you do all the work and somebody else make all the money. We don't want to see that happen.
No.
It happens a whole lot of times, too, in the business world, where your good idea gets sucked in by somebody else, and then they forget you even came up with it.
Yeah, that's good. Yeah.
So, Steve, any other? You've had a couple of those brokers behaving badly lately. Anyone you want to feature, like just some off the top of your head of ones that you saw that were egregious, like the one we just talked about a little while ago?
They're all like that. I mean, truly, when there's one that I check on about every 6 or 8 weeks, and it's a guy out of Atlanta.
Yep.
I don't know if you remember this. It was 3 years ago. He just vanished. Right? He
I
was an
remember
advisor,
that. Yes.
And he just vanished. And they thought his wife was involved. Well, it turns out she wasn't. He didn't know where she had no clue where he's been. He has not turned up since. Now
So
they
still haven't found him.
Yeah, they found his car, but they didn't find any money.
And how much money had he run away or flown away with? Or
Several
whatever
million.
Wow.
Ooh.
The one that sticks out of my mind was in Wilmington, North Carolina. A guy was
that guy.
a pilot. And what he did, and I figured out what he did after the fact, it looked like he had a plane crash and died, but he had stolen so many people's money that was too much of a coincidence. There was a body in the wreck, but it was a cadaver he had gotten from some morgue, a guy he knew got a morgue. And so he parachuted. He basically let everyone see him take off with the plane, put it in automatic pilot or whatever he did, parachuted out, left the cadaver in there. Plane crashed, and they found what they thought was him, but I think they figured it out because of dental records. He didn't do it. And I think he really tried.
He didn't think that out.
Well, he should have pulled out a couple of his teeth and left him to see.
Well, yeah,
That would have been kind of
There you
painful.
go,
Right
there
there. Yeah, but I think they did find him, didn't they? I don't remember what happened. You know what I'm talking about.
Yeah, I do. Yeah, absolutely.
I'm pretty sure
No,
they
did.
found him.
Yeah, he's
some island somewhere down in the Caribbean, and I think maybe that's where our buddy right here is. Not our buddy, but the guy you're talking about there. I think he might be out there weekend with Bernie's kind of guys.
Yeah, we're not going to see him at the Circle K anytime soon.
Now, the price of gold is $2,345 an ounce right now.
Oh,
It's
boy.
getting up there.
Yeah.
It was flirting with $2,400. Been coming back down a little bit, but still, that's a pretty hefty price for 1 ounce of gold. Anybody, you ever thought about investing in gold? Or
No, not
looked at
really.
gold?
I mean, I just hear all the commercials. The only time you hear those commercials is when the economy is burping like it is right now, and then everybody panics.
Just be careful about, like, you hear all these commercials about putting your IRA in gold.
Oh,
and
yeah.
There's a lot of, I don't know anything about this market, but I hear they make a whole lot of money, 10% maybe, of your money they make, putting it in that process, taking it out of a traditional 401k or IRA and rolling it into a gold IRA. I don't know what the process of that, because you may be buying paper gold too. Like you get a piece of paper that says you own gold. That's not gold to
If
me.
I'm going to own gold, it's going to be
Gold in my
hard,
hand.
solid gold.
Not going to let somebody keep it in a safe somewhere. Yeah, gold's down about $45 today, which is kind of strange because we got the inflation numbers going up.
Yep.
You think with the dollar getting beat up, the gold would be going up, but gold's. I think here people are just getting fatigued with every month. News coming out that's not what we expected or worse than we expected, or they revise the numbers from the month or before, and they're always bad.
Yep.
So that tells me they knew the news was going to be bad, but they didn't give it to you at one scoop. They said, let's give them a couple scoops here. We'll give them 2 more scoops on the next report. We'll revise the numbers. I don't think that should be allowed.
No,
they should know the numbers right away.
They should.
And they should say, we're potentially, they should say potentially, I guess, when they really know they're going to revise them lower next month. Greg, what do you think? They always revise lower, it seems like.
Oh, yeah. You know, they're always making changes, and you're constantly confused by what they're trying to tell you.
Well, maybe that's the idea.
Yeah.
What do you think about that? You
That's
never know.
exactly the point.
The idea might be to
It's
confuse
confusing to the point of submission.
All right, Steve, the Microsoft earnings are coming up, so that could be a catalyst to the market, or it could be another weight bringing it down. And so another straw on that camel's back.
So we should just be keeping an eye on that.
Yeah. Revenue forecasts and Zucker's comments on spending are what drove Meta to go down. You can read about that online, but Zuckerberg said some things he maybe shouldn't have said publicly about the long term, and it got investors spooked. And when you get spooked, when you have a stock that's around $500 a share and a $900 a share like NVIDIA, investors get spooked pretty easy.
I can imagine.
You don't want to see all your profits go away. You've waited years sometime to get up here, and then in the matter of a week or a day sometimes you could lose all your profits. So what people do is they try to take some profits out when they see the stock going down, and then the stock continues to go down. They're happy because now they can buy back cheaper. And so a lot of times they'll sell high up here, and then they'll start being the ones writing the articles or going on comment boards saying, oh, the market sucks, get out right now, because they want to drive the price down. So you always have to know the true motivations of the person you're getting the information from. we're total, as my practice, we're total fiduciaries, independent fiduciaries. So we talk about risk and safety. I just like for my clients and myself, safe money first. Some other planners want all managed money all the time. Managed money is where you're putting the money at risk and you pay a management fee. Nothing wrong with that. We do that as well. Yep. But we only do that after we have safe money and retirement accounts set up. When you know what your income's going to be forever with no games or gimmicks, it makes it a whole lot easier to take some risk. Matter of fact, it makes it even easier to take maximum risk, Greg, doesn't it? So it's more fun to take a lot of risk when you know even if you lost that money, you still have your retirement account.
What's kind of funny is every time I talk to somebody, I say, okay, on a scale of 1 to 10, 1 being you put every penny in the bank or you bury it in the backyard like Cousin Eddie on the family vacation, or 10 is 100% in the stock market. Where do you lie? And most people, Coach, I mean, we deal with folks usually, 55 and up. Most people, 55 to 75, they're like a 4 to a 5.
Yeah.
But then what happens is I present to them, this is where you are today. And then I show them the pie chart, of which 95% of what they have is all in the red.
Oh, wow.
You think it's bad now. What would happen if Middle East, we have escalation in the Middle East. There was an article in CNBC today. The Middle East escalation could trigger energy shock that fuels inflation. Well, we already have inflation. World Bank warns. Well, thanks for telling us, World Bank. We've known about this for a long time.
That's true.
They're forecasting if something happens over there, something major, $102 a barrel could be a norm.
And the oil reserves are lower than they've ever been.
Well, that's been done.
Yeah.
Oh, it's not something that happened right away. It's been happening. But we don't have any reserves. But still, you don't want to refuel them now with the prices way up. So
no.
But $102 a barrel. Inflation would be out of control even worse than it is today.
It would, and something that makes me think just as a consumer is that this, and I think about this just because you can apply it to playing a Nintendo game or anything. When you get put in a pinch, people often make more irrational decisions, and so it concerns me for a lot of people out there because you're going to try to hit that A button 7 times instead of actually doing it when you need to, or in this case, maybe buying or selling a stock or investing in something or not investing in something because you're worried, concerned, anxious.
Yeah, and then you make irrational decisions based on emotions.
Yep.
There's something called the fog of war.
There you go.
During a battle, you're not thinking straight. You're just you're running to safety somewhere, trying to get out of something, and not really thinking about what's going on. The fog of war happens in the money world too. I mean, when you watch a stock start to go down, you forget all the reasons why you invested to begin with. The fundamentals. If nothing's changed fundamentally, you shouldn't get out. You should add in. But if the stock now, when we talk about them not meeting the earnings expectations, well, then something did change fundamentally because you invested based on what the CEO told you in his or her forecast the stock was going to do in the future. When it doesn't do that in the future, of course, people sell and the stock goes down. When they overperform, they say, gosh, the CEO over and above did what they promised. People run in because now they trust the CEO more. Yeah. Trust is money. Money is trust. The stock goes up in price. So it's not that hard to analyze the market. It is hard to make a lot of money in the market because as soon as you buy, Murphy's Law kicks in and the stock goes down sometimes, doesn't it?
There you go. It's true. Yep.
Best stock ever. Coach Pete jumps in. Everybody else jumps out.
I feel you.
Remember the cartoon where the guy's jumping on a diving board? He jumps up and he looks down. When he's midair, there's no water in the pool anymore.
Oh, yeah.
We don't want to be jumping in water with no pool.
No,
you
we
got
don't.
that picture in our office, Coach. It says buy high, sell, buy low, buy high, sell low, repeat until you're broke.
Yeah. Yeah. Well, get that straight. What is it really, Greg?
Yeah. Buy high, sell low,
Yes.
repeat until you're
well,
broke.
the old joke is, you know how to
love
make $1 million in the market is to start with $2 million.
That's
So
a
we
good
just
one.
have to be
I like
careful
that
on
one.
this. It's all about because the market is like quicksand.
Yeah, it is.
There's ways to isolate yourself from quicksand by getting going over to the insurance side and getting some insured income. That's not quicksand. That gives you a yearly income you can never outlive. The only quicksand out here is if you're in the stock market or if you have a broker charging you a planning fee every year. That's quicksand. That's money that you're never going to get back anymore. So make sure you know, again, where your money is, why it's there, and the fundamentals of why you put the money to begin with. If you do that, everything will be fine, folks. This day-to-day, news cycle kind of driven market, ignore it till you can't stand it anymore. But I really think ignore it as long as you can check the fundamentals yourself and you know the true facts you're getting. Then if everything's the same as it was when you invested, keep investing.
Yep, Yeah,
Okay?
I agree.
We'll be right back after this.
I'm used to being able to control the environment.
Got,
I understand. We'll get that computer and that'll help explain
so I got this.
No, I can do quotes. It'll just be audio only. Yeah, that's all it is. That's what Chris is going to start doing. I totally do. We played the costume one, and we've got.
Well, I've got two from Larry
and
Fink
Jimmy Diamond.
on BlackRock, and it ties into the story about 1 in 4 adults 50 and older who aren't yet retired expect to never retire.
Sweet. Okay.
Yep. And I'll grab the. We'll grab those all.
Yeah. Yeah, and I'm ready for him. Here we go. 3.
Oh, no, wait. Let me pull up my. I'm going to get a mouse for this thing now.
Sure thing.
And welcome back into IncomeRevolution.tv. Consumer advocate Thomas Lipscomb here alongside the crew. Best-selling author Coach Pete DeRuta here with us, as well as insurance advisor Greg Berry, and also have financial news guy Steve Siddall. Steve, you were chopping at the bit there to jump in.
Well,
What do we
yeah,
got going
because
on?
a new survey just out, and this is everywhere. It came out yesterday, and now I'm seeing it virtually in every publication. About 1/4 of U.S. adults age 50 and older who are not yet retired say they expect to never retire,
Wow.
and 70% are concerned about prices rising faster than their income. That survey from AARP.
You know, the funny thing is, the more your income goes up, the more prices are going to go up too.
Oh, sure. Well, and
When you have the increase in minimum wage, guess what it does? It makes you got a lot more dollars in the economy, but you have a lot fewer products for those dollars, right? Because they're not making more products many times. Matter of fact, they're making less products, but the numbers came out today.
Yeah.
But if you have a lot of dollars chasing a number of products, guess what's going to happen? Supply and demand takes over, and up go the prices. So the fallacy was, hey, let's give everybody increase in minimum. Let's bring minimum wage up to $25 a share. Everyone will be happy until they go shopping. Then you have Happy Meals at $7, $8, $9, $10 at McDonald's. No one will be able to afford to eat out anymore, which is a good thing. Probably we'll all probably lose some weight.
probably so.
Where's that little thing at? Yeah, because I mean it's just crazy, Steve. But I mean it makes sense.
So BlackRock Chairman, CEO Larry Fink, he talked with Bloomberg, and he agrees there is a retirement crisis in America. And here are his thoughts on how we can maybe get through it.
All right, here we go.
The acute problem here in the United States is that we have still 57 million Americans who don't have any savings or any retirement plan. Social Security is a fantastic foundation for retirement, but if that's all you have when you retire, you're going to be living in poverty, below the poverty line, because it just is not, it's supplemental, but it's not meant to be the totality of what you have in a retirement. And the whole concept of we're aging, we're all living longer. And I think one of the big narratives I've had to reflect in 2023 was the miracles of medicine, of technology, and how it transforms our lives and extends our life. There is not a dialogue in America or most places about can we afford that longevity.
Well, again, you know, it's what you've said before, Coach. There's good news, bad news.
Yeah.
Good news is we're living longer. Bad news is we're living longer.
Well, we always say we're living longer, yet I keep hearing about a lot of people dying in their 30s and 40s, though, dying suddenly.
Yeah. Well, yeah.
You heard about that?
We're hearing a lot about
I mean,
that.
how are we all living longer when I keep hearing, and I've lost a few friends the last year that were younger, a lot younger than I was.
That's true.
So, yes, living longer is nice. If you do, you need to make sure you have income that lives longer
That's
than you
the
do.
key.
That's what you're saying there. And so Social Security, like he says, we've always, Greg, you do a lot of Social Security printouts for folks. Social Security is good to have, but it's not going to carry you all the way through retirement. It'll help you. It's not going to carry you. You have to have a supplemental plan. We're going to talk about that in the next segment. We're going to do a case of the week on that, aren't we, Greg?
Yeah, and don't forget, Coach. I mean, right now they're saying 2034 that Social Security won't be fully funded. In which, let's say you're getting $1,500 a month, you're going to get 20% less. So instead of going forward, you're actually going backwards, and so you really need that money.
Well, you know what we need? We need the kids to work, because if kids aren't working, the kids that are, a lot of kids don't want to work anymore, but if they're not working, no new money's going to go into Social Security that pays us when we're retired.
Exactly.
And the kids aren't having kids. That's a big problem too.
So there goes the income.
Yeah.
That's why we always recommend having your own plan. Social Security, if done correctly, Social Security is just icing on the cake. You already got a great plan. It's just extra money for you.
Yeah.
If you're going to depend on it to pay your house payments, you're going to be in a lot of trouble. And so it's never too early or too late to start your own retirement plan. But because, we have the 401k. That's basically what retirement plans are, 403b, thrift savings plans, that kind of thing. But there's no real pensions anymore. Like there used to be a day where you'd work for a company for 30 or 40 years, and then the company would continue to pay you even though you weren't working anymore. That was called a pension. Companies started saying, well, we can't afford this anymore. Let's shift the burden to the employee. That's why you have your 401k. That's an employee plan, because you have to put money in to have retirement. Now, if you put money in, sometimes these employers will match it. To me, you can open up your own IRA, too. Put money in IRA or build some money in your stock account. Have that be your income account. Just know where you have to build up a pretty substantial amount of money these days to have a lifetime income you can't outlive. Now, the beauty here is if you meet the right planner and they can show you how to translate these lump sums we have in our 401ks and our stock accounts, see what a lump sum would translate to for a lifetime income you could not outlive, it makes retirement a lot simpler. Because if you approach retirement, you got, let's say, $1 million in an account. You say, I'm going to retire now, Coach. And I said, well, what's your income plan? Well, I don't have one. I'm just going to take money out of my stock account when I need it. I said, well, that's great. What happens if the market goes down? You're not going to have some money there, or you'll be maximizing your losses when you take the money out. Why don't you set up, at least take some of this money out? Let's put it in a place where we know with certainty you're going to get a check every single month for the rest of your life. And if you pass away, your spouse will get that check as well.
Yeah.
Even if the balance goes to zero, you continue to get these checks. It's called retirement autopilot. We've got a nice sounder for that. Or financial fill-up strategy. You pull up every year, you get your paycheck, and it never goes away. That takes, and it doesn't have to be all your money, obviously not, but you can see, it's great to see, based on what you put in now, what kind of income you can get later forever money, and it can start as soon as next year. So let's say someone's saying, this is too late for me, I'm 64, I can never get an income plan. Well, yes, you can. You can start it today, and you can start taking income next year. And so that's the beauty. The longer you leave it alone, of course, the more it grows.
Of course.
Never shrinks. It shares in the gains in the market, but never goes down. So it does make sense for the money we're going to need to pensionize, turn into a paycheck. But then you stay, like I say, some of my best clients, some of my sharpest clients, keep some money in a brokerage account. And they like to research stocks. They like to keep their mind sharp. They like to run ideas by me. And what I say is, well, it sounds like a good company, but I don't know if I'd invest now. Because I can't tell you I would invest, because then if you invest and you lose money, you say, well, Coach said I should invest. No, I was just listening to you talk. So I never give an investment advice. What's a good investment? What's a bad investment? Well, it could be a great investment today, a horrible one tomorrow.
Sure.
We don't know. Market cycles around. So you see this too when people run from, and this has been happening in the microcomputer, the microchip, like the tech companies, the NVIDIA and all that. People are leaving there. They're locking their profits in and taking the money back and putting it in different parts, different sectors, maybe food now, and because we have to eat, right? So the food, the number one investment, I think, long-term in our lifetimes will be water. Water is something that we need, clean, drinkable, or clean water. But without water, there's no life.
That's true.
So there's, I don't know about bottled water companies, but if you could invest in some springs somewhere, or aqueducts, or desalination plants, turning ocean water into drinkable water. Those kind of things make sense. I don't have a particular company in mind, but I mean, you look at that sector, you do your own research. Again, this is what some of my best clients do who do on their own. They look at things like this, and then they spend time researching and having fun and making their mind work. If your mind stops working, it's going to lock up. If you don't, like I've got a car, I leave in the garage, I have to go start it like once a month, or the battery dies, or the fluids don't go through. So you have to keep it moving, just like you have to keep your big motor right up here.
You do.
Mine looks bigger now that I got a bald head, but it's in there. The motor's always running, but you need to keep it running. You don't let it take breaks too much. Steve?
Right.
Agree
I
or disagree?
completely agree. No, I completely agree.
Any other, who else is saying stuff about the money market? Oh, here's another thing. Southwest Airlines is down 6.79% today. Very unusual that. I don't know what happened. I just came across my board. I don't like Southwest Airlines anymore. I do have some Southwest Airlines in my stock account. But I just don't like the feeling on Southwest Airlines. I just don't like it. So it's just they pack you in too much. It's they don't have any weight requirements. It doesn't look like either. So I'm all squeezed in. I'm not a little guy either. I'm about 210. But when people on both sides, if I have to. Remember back in the day, if you
That's
get to the playing weight,
Oh,
guess where
yeah.
you're sitting? You're sitting in the middle. And if you're in the middle and people are like 2 times bigger than Coach Pete on both sides, that's an uncomfortable ride, especially
Yes.
4 or 5 hours.
Ooh, that would be.
Yeah.
That
So
would be.
let me tell you a story, Coach. Can I?
You sure can.
All right.
Steve.
So my granddaughters, I had 2 granddaughters in town last weekend, and
Oh.
I'm having a conversation with the older one. She's 21. All right, and she works in healthcare, and she got paid while we were there, and she looked at her phone, was looking at her pay stub, and she said, I really hate my IRA.
What?
I said,
Oh.
what? She said, but look, I see this money, and they keep putting more in there and more, and I want it. It's mine. I said, no, you can't do that. And she said, and then my dad made me open a Roth.
Made me.
What a horrible man.
And I said, your father is a very smart man. You are going to thank him for years.
It's the best thing ever. It
Absolutely.
really is. I mean, when you get that tax advantage, you're never going to pay tax on that money. And she should try to take the maximum risk she can in that Roth.
Oh, yeah.
To get it
Well,
to grow fastly because you'll never have to share any of her gains with the IRS.
Sure.
Hey, I've got something for you. Now, Chipotle, ever eat there?
Oh,
yeah.
yeah. Oh, yeah.
Now, today, don't looking at anything. I want you guys to look at me right here.
All
Today,
right.
it's up 6.57%. That's a pretty nice percent.
good.
Now, what do you
Pretty
think
good
that
jump.
translates to as far as how much it's up dollar-wise? What is 6.57% up in Chipotle? What does that mean dollar-wise today?
I have no
I
idea.
guess $192.33 a share. Chipotle, it's up to $3,118. I'm still mad about this because I've had a
my.
dividend reinvestment program since right after high school with a McDonald's.
Okay.
McDonald's is the one that started Chipotle. I didn't even hear about
I
Chipotle
didn't
back
know
then.
that.
They sent me a letter way back in the day. I had like 400 shares of McDonald's by then. It said you can either keep your 400 shares of McDonald's or you can take, let's say, 100 shares of McDonald's and 300 in Chipotle. They were doing dollar or share per share. I decided I didn't know who the heck Chipotle was.
Yeah.
Chipotle. Is it some kind of sauce you put on a taco? I don't know whether I didn't do it. And I'm still mad, though, because usually, like Pepsi, when Pepsi spun off Frito-Lay, they gave everybody who already owned Pepsi some Frito-Lay stock. They should have given me some Chipotle shares. And they didn't. And look what's happening.
Incredible.
It's never split. It just keeps going up. To
Yeah.
me, they should probably split like 20 to 1 and at least get it down to a level where people might start wanting to invest a little.
I agree.
Would you ever go to the broker and say, here's $6,000. I want 1.87 shares of Chipotle. I think I'd rather just go
Not
buy some
happening.
tacos.
I think I would too.
But that's just funny. We look at the food stock like that. Chipotle is known for fresh ingredients. I've read some articles that say a lot of the ingredients have some chemicals in them, though, so you have to be careful. But a lot of people I know somebody who's on a gluten-free diet, and they exclusively go to Chipotle every day because they're gluten-free there, I think. So that's what he says they are.
Interesting.
What he says.
Fair
Didn't know
enough.
that
But
one.
that's pretty funny. So you hear it being up 6.5%. Your mind doesn't say $192 a share,
No.
does it?
No. Nowhere near that.
Thomas, when's the last time you ate at Chipotle?
It's been a little while, but I do enjoy going there.
That's a new 52-week high. A new 52-week high for Chipotle, by the way. Which
Is it really? Wow.
Why isn't it? That's a big
Yeah.
way up.
They make
So
a
I just
good
wanted to give
ball.
you some good news here with some stocks up. Meta's down. Textron, IBM is down. Southwest. So I mean, some of the names are there. Again, we're not talking about individually investing anyway, but you can play. There's some plays here. I mean, if Meta goes way down, it might be a good buy because it might bounce back up.
Yeah.
But I don't know how bad the news is. I haven't researched it there. It could be really bad news and might go down even more tomorrow.
Yeah.
And then here's another thing: when people have stocks on margin, let's say I have $10,000, but I want to buy the equivalent of $50,000 worth of stock. I can borrow some money from my broker and in effect put it on margin. So let's say I borrowed a lot of money from a broker to buy Meta when it was up to almost $500 a share. Well, now it's way down. And at the end of the day, my broker's going to send me a letter saying you either give us some cash or we're going to liquidate this Meta tomorrow morning to pay our loan back because
Oh, yeah.
we need to get it on margin. So
Okay,
then that's why you say a stock goes way down one day and you think it's going to recover. The next day it goes down even more because the margin calls come in, which what the broker does. Most people don't have the money to pay the margin bill, so they says go ahead and liquidate it. They liquidate it. Guess what happens? That's more selling than buying. And what happens? Then we have the avalanche. And so that can continue for days because a lot of people are able to pay the bill, the margin bill, but then it keeps going down. They finally surrender.
Yep.
And then if you could really see where that tipping point is, where the last margin person get out and everything's like they're done with those margin people, what the stock you stabilize and it starts going up sometimes, especially if the fundamentals are still good with the company. Again, that's why we always look at fundamentals first, investing second. When we come back, we're going to go through a case of the week. We're going to go to a couple more of the comments, hopefully, from the national media, and we'll just finish the show up, folks. We'll be right back after this.
And welcome back into Income Revolution. Consumer advocate Thomas Lipscomb here with you once again, heading into the tail end. Hopefully you guys are having a good time watching, listening into the program. I am here with best-selling author Coach Pete D'Arruda, as well as insurance advisor Greg Berrien and our financial news guy Steve Siddall. If you want to catch up on Income Revolution, be sure to head on over to incomerevolution.tv. You can also subscribe to us on YouTube as well as Rumble, which is probably where you're watching us right now.
All right.
When we do a monthly net worth spreadsheet, we look at what you bring in versus what goes out. And so that's why I like to bring in the show every week mortgage rates. Because if you're paying a lot for a mortgage, that's less money for your family to spend doing other things. Mortgage rates right now are 7.869 for a 30-year. Wow.
That's tough.
And for 15, 6.92. And then you get down to the 10-6 arm, like the arms and all that, there's pretty bad too. So I like either 15 right now, 15 or 30, but I would advise if you're getting a house right now or if you have to get a refinance, whatever, get it now. But if the rates come down in the future, do a no closing costs, but both times. That way you're not paying closing fees, which could be $5,000 to $7,000 a loan. You could get those gone away with. You pay a very little bit higher, maybe an eighth higher rate, but you can refinance at any time. And especially in the environment we're right now, and you're saying, I'm not going to get a house until rates go down to, let's say, 4%.
Right.
Number one, good luck on that.
Oh,
Think
come
we might
on,
see
please don't say
5.
that.
I really think we're going to see higher before we see lower. I've been saying this.
Yeah.
I still hear a commercial on the radio locally where the a real estate person is saying they're promising us 3 rate decreases this year.
Sure.
She needs to redo that commercial because she sounded stupid every time I hear it. We're not going to. The Fed has lied to us, unfortunately, because there's nothing transitory about this inflation. It's here. It's been here, and it's not going away. And I think we're going to have to. It's going to have to get worse before it gets better. Yeah. So, if and when it does come down, though. Well, number one, that's why you want to get a loan right now. You don't want to wait till it's like 9 or 10%, and you'll feel smart down the road when it's 12 or 13%, and you have 7.89. You feel bad right now, but again, that's recency bias. It's called. In the future, you may be looked at as a hero for getting it now. But here's a good thing: because you're doing no closing costs, when the rates go down, you can refinance every month. Now, your mortgage broker is not going to want to see you every month. They do make money every time you do it, though, but you don't pay it. It comes out of the bank's pocket. So let's say rates go down to 5% in a couple of years. You've refinanced all the way down, so you're not really costing yourself a lot of money. Plus, you're in a house and you're building equity. Number one thing, you're building equity, and now you have something of value that you own in your family. You're building a legacy, too. Whereas if you're renting, you're probably going to pay just as much as a mortgage would be, and you're not going to own anything. The good thing about renting is that if something breaks, as long as you have a good landlord, you get on the phone, and they come fix it. Yeah. If you own it, Thomas, you own a house. You own a house.
I own a house.
You own a house. Who is a repairman when something breaks in your house?
This guy right here.
I call the guy.
I got a guy.
I got a guy.
Or who's in charge of getting the guy? You are. So
Yeah,
the
me,
good thing about having a rental place, you just get on the phone. Now, I own this building here. It's never been any fun. We have 16 HVAC units here. 16 air conditioners, 16 heaters.
And each of them have a name, I'm sure.
It's like, I was going to say, it's like having 16 kids every single week. One of them's misbehaving, even though we put all new ones in
It's the
about
truth.
3 years ago. About a week after that, they were still misbehaving.
We're on a first name basis of those
So-
AC guys.
Just know before you get in a house, it's not free and clear. You're going to have some more work to do, and you're going to have some more costs that you didn't see. But you're building something for your own. You have somewhere where your kids can grow up in, and when they come back, they'll visit a house. When my parents moved away from Laurinburg, when I left to go to college, my other brothers did too, and then my parents moved from Laurinburg to Fayetteville, North Carolina. So when we go home to visit, it wasn't the same anymore because it wasn't home anymore.
Yeah.
So it was a house, not a home. So that what you're building is a home when you own the house. So again, I'm not a mortgage broker. I'm not a real estate person, but I'm just saying, if you're saying I'm not going to get in until rates come down, that's not a good strategy because we might not see them where you think where they're going to be in the future, especially if you're reading or believing what the media tells you.
I remember we bought our
good.
first house. It was like 9% years ago down Fort Lauderdale.
Mine was 8%.
Yeah, but the house was $140,000.
Mine was $108,000.
Yeah.
Okay, I'm older.
3 bedrooms, 2 baths, Greg.
Yeah,
and a nice 1 acre in Holly Springs, North Carolina. Nobody knew where Holly Springs was. This was 1996. I wish I would have kept that house because I looked. It's worth about $500,000 now.
Oh, yeah.
I did sell it for double, like 10
That's
years
good.
later.
That's
But
good,
yeah, I thought I was smart. I wasn't
Yeah.
too smart.
Yeah.
But again, don't let short-term fluctuations influence your long-term decisions. This is a big decision, a house. So again, don't get in if you can't afford it though, because it's about double to get in a house that it would have been. Your payment's going to be double than it was when me and Greg got our house.
Sure.
When we got in our last house.
Yeah, right.
Now,
the last
at
one,
8%. Well, again, because houses are a lot more expensive. I don't even remember what my mortgage payment was, but it couldn't have been that high. I was at 6%, and my loan value was like $100,000.
And one thing that's keeping the market really afloat right now is people who got those 2 and 3% loans. They ain't selling.
I'm not selling mine.
Not me neither.
Yep, I'm not letting go of
They're
it.
not selling.
I refinanced a building years ago at 4%, which is a business loan that's pretty doggone good. I don't even know what business loans are even higher than that now. So, anyway, Greg, Thomas, we still got time for a case of the week, don't we?
I think that we do.
Let's go through the backstory on this, Greg.
I took a little different angle on this because as we always talk about, the stock market has fluctuations. It goes up, it goes down. It's gonna do what it's gonna do.
Yep.
You know what I mean? And the thing is even if you're in an insured account, if you're taking money out of an insured account, the value could go down because you're taking money out of an insured account. And so we work, Coach, with two different kinds of accounts: accounts with guaranteed income for the rest of your life, lock it in. All right, and also accounts that are geared more towards earnings. So today I'm looking at the earnings position.
Okay.
Okay, and what I like about this is we're talking about a person. Oh, hello.
Are you going to use our whiteboard right there?
Yeah, we'll go on the whiteboard. Man.
Custom design whiteboard, by the way, folks, for the show.
Yeah, thank you, Tom.
Got the current situation up there in the top left. You're going to show that?
62 years old.
All right, 62.
And retiring, so he's...
Oh, they want to retire now?
No, yeah.
They're already retired.
He done good.
All right.
Good.
And he's a male, obviously, because we have it in blue.
Yep.
We're still allowed to do that. It's my show.
There we go.
Thank you.
So his current age 62.
Is
That's
this his
the
wife?
wife 62 as well.
So they're both 62.
Right. $800,000 in savings. All right.
All right.
Okay.
That's 80,000.
All right.
Make it 800,000.
Oh, you're right. Thank you. I need a zero there. Okay.
Coach Pete watches numbers, Greg.
Coach Pete does.
Coach Pete's a numbers guy.
So the rule of 100, we're going to take 62.
So, folks, the rule of 100, you take your age minus 100.
So that means 62 or 38 in risk and 62 in safety. So what we're recommending is $500,000 to insure that account.
So, folks, just to give you a quick, the rule of 100 says you take your age minus 100, or you put your age down. Right. And so 62, put a percent after that. 62% of your money should be in a place you couldn't lose. Right, Greg?
You bet. We're looking
so you want
at
500,000 of those dollars in a place you can't lose. Basically.
We're putting this money into a company as an A+ rating.
All right. Insurance companies get grades just like we used to get in school. I didn't get too many A+, but insurance companies do.
Oh, yeah.
Congratulations for them.
And just so you know, those are the only kind of companies we work with as well.
Yeah. Well, that's my rule here. We don't deal with any bees.
No such thing. This is
no killer bees, Thomas.
An 18% bonus.
All right, so the insurance company, knows you're going to be a client for a while. They want to entice that relationship. They give you 18% up front.
Okay, so that bonus amount
18%
is
of
going to be
$500,000.
$90,000.
So that's a nice little bonus. It's almost like winning the lottery.
Yeah.
Without having to buy a ticket.
So, but let's go on the assumption that there is a colossal loss in the market
All
for
right,
the
so
next 3
having
years.
A big tidal wave hit. It's not a good thing.
Huge tidal wave.
The red wave.
So even so here you are.
Bad
you now have $590,000 total in your account. Actually,
Greg, you went to the same school to write that I did. I think.
Yeah. So let's say you have 590 instead of 500. So you got $90,000. That this company actually is liquid cash to work with.
That's a couple vacations and three.
And you're taking 5%.
Greg takes him, probably one of his.
You're taking 5% of the original 500,000.
Yeah.
All right. So you're going to be taking $25,000 a year out of that. All righty. So now you've taken $75,000 out. Okay.
But wait. You're taking 70. What?
Over 3 years. Over 3 years.
You're going to take $25,000 out
per
a
year.
What? Can they get more than that?
Oh yeah, you can definitely take more than that. You can take 10% out.
Take the bonus out. Is that what you're saying?
We're taking money out of the bonus, Coach.
Okay.
We're taking money out of the free money.
Okay, because they don't need to start taking income from their actual annuity yet. I guess,
no,
right?
they don't have to. So they're taking money out of the free money.
All right, so you're getting $25,000 a year to have fun with.
Exactly.
Buy a new,
exactly.
I don't know if you can buy a new car anymore with that, but you
No,
can buy
I don't think so.
You used to be able to buy a car with that.
But
you can buy a couple of Happy Meals.
But actually, after everything is said and done,
yeah,
you are going to have $499,000. Where do I put this here? We'll put it right here. You're still going to have $499,000, $704. So basically, you lived through 3 years of a destructive market, and you still came out with the same amount of money that you went into.
In 3 years, they took out $499,000.
No, you still have $499,000.
It says income received.
Yeah. We have a little bit, there's because of the structures, there's like a little bit of fee on this. Okay, it's less than 1%, and at the end of the day, you have almost $500,000 still in that account, even after the market's been down for 3 straight years. And if you were in the market for 3 straight years with $500,000, you probably have less than $300,000.
I know, but I'm not seeing the benefit here. So what they put in $500,000, now they have $499,000. They got $25,000 over 3 years. Is that what you're saying?
Yep. So they live for 3
That's
years.
not that impressive to me, but okay.
They live for 3 years on the company's money, though, Coach. 3 years they live.
Okay.
And now when the market starts going up, now they'll start taking advantage of the market.
They don't need immediate income. When they take income, what kind of income are they going to get? You know
We're looking at still maintaining around 5%. Still taking around 5%, and ideally, we're looking at earnings of
$25,000 a year forever. Basically,
we're looking at 5 to 7% ideally on the return on that.
Okay.
So basically, we're looking at never really just that financial fill.
All right. So you basically were just showing how to
ride that wave.
Let me use my word. Liquidize the bonus. That's what you're showing.
Exactly.
All right.
Liquidize.
All right. Next time, let's approach it that way. Then say liquidize bonus, because to me, if I'm just somebody watching this, I put in $500,000. He's telling me I'm going to have $499 in 3 years. A big deal.
But this is after the market.
What?
This is after the market's been down for 3 straight years.
But you better be in a fixed index annuity where you can't lose money in the market anyway.
Exactly.
All right.
Well, so even if you're in a traditional fixed index annuity, Coach, you're still taking money out of it. So it still could be down a little bit because you're dipping into your principal. Here, you don't touch your principal for 3 years. That's what I like about that.
Okay.
Because it basically you ride over the waves.
All right, but then we're not short-term planners though, so that's why this isn't impressing me. I want a long-term plan so you're saying for a lifetime they can get $25,000 a year whenever they start doing that, and they'll never run out of money, right? Husband and wife, right around there.
Yeah, that ideally how it'll work. Yeah.
Well, ideally, I mean, it either is or isn't. All right, thanks, Greg. We got about a minute left, Steve, or 30 seconds now. Any other comments to follow up the week?
Well, no, I just think we could keep an eye on the market and, hang out for next week.
Yeah. Well, again, folks, the object of the show is just to educate you on some of the things out there, give you some good, bad, ugly, and just get you thinking about the money world. I hope you really enjoy finding out about the world, maybe to entice you to research more and find out what's going on and making sure you're doing the right thing. But again, don't let the short-term fluctuations influence your long-term thoughts. Coach Pete here, Thomas Lipscomb, Greg Berrien, Steve Zadal, and Mr. Cesar back there working the board. We'll see you next week right here on the Income Revolution Show.